Pardon?
Precision?
No, that was actually the last P. I'll add that in.
See.
I'll add that in. But what was the James? What was the first P? James?
Yeah, I'm sorry, I was on mute. Sorry,
it's all right.
I was on mute. Yeah, no, I have to memorize this stuff because you keep asking me. Yeah. So the first P,
positioning. In fact, what I'm going to do is an image speaks 1,000 words, right? So I'm just gonna open this up. So can you all see this?
Yes.
So the premium footprint execution process, there's 4 main components when it comes to refining your execution process. So just remember this: good execution basically comes down to how well you can follow a process, right? So what Aman said here was precision, which is fine. That's the final P. However, the classic problem or the classic mistake I see people make is that they rush towards trying to get a precise entry. They may rush towards footprint charts or even worse, indicators and stuff like that. When in reality, if you can build an entire system around finding your level, which is positioning, understanding what price is doing, so that's the order flow, understanding what the order flow is trying to tell you, what proof is the market giving you, to then execute with precision, right? So if you miss the first 3 Ps, it is very difficult for you to get the precision entry. All right.
Yeah.
So this here is what I want everyone to memorize. Yeah. How does that sound? This is the promise I want you to make with me and yourselves. Just remember this, and you don't have to memorize it because I'll send you an image, right? But this, if you can think through everything in this framework, you will be golden. You'll be good to go. I want this framework and this circle embedded. You don't have to worry about this part of the image, right? This part you can forget. It's just mainly this part here. You just want to get good at memorizing what this circle tells you, because the positioning, the price, the proof, and precision is the entire process that we want to follow. So how does that sound to everyone? Let's go to the charts. Let's actually start with the first P, which is positioning, right? So I had my levels, and just from a positioning standpoint, let's go back to where the market opened. So let's go to the pre-market plan. So the pre-market plan, it looks something like this. Can all of you see the school?
Yes.
All right, great. So from the school's perspective, it looks something like this. So structure, we start. So let's remember. So what was our first step? There we go. So the 4-step positioning process. Right, I'm going to go through this a little bit quick because today's the entry elevations, the bolt breakout blueprint. But just so you can understand where I was in terms of the pre-market plan, this image here, or the 4-step positioning process, is how I find my key levels. Right, this is one of the most common questions I get. How do I find my key levels? It comes down to the image you see here. So structure, targeted liquidity, equilibrium, and pricing balance. When you step up all 4 of these, you end up at your key level. Did someone have a question or
no?
All right. So from here, let's break this one down. So let me just download this image. So if you look at ES futures over here, we can all see here high, low, then we had a high. So what I was trying to say earlier is I think in the New York session we actually came off this level here. So I think I made a separate image on this, right? So hopefully the reason I'm showing you this is because I want you to understand that we were buying because the market had given us a discount. So remember, it's very basic. It goes high, discounted, low. So that was actually FOMC. FOMC gave us the discounted low. So in other words, it looks something like this, right? So this is super basic structure, right? So it goes, I know this may look basic, but I think when it comes to real-time precision, a lot of people, they tend to overlook this stuff, but I think it's super important. We went high, low, and now we were sort of hovering around here, I believe. So think of it this way. If this is your structural low and this is your structural high like this, price has already given a discount. So when price came into these discounted areas, we were looking for longs because we had already fulfilled the discount. Does this make sense?
Yes, it does.
Right. I know it's a simple concept, but a lot of people overlook this concept.
Mm-hmm.
So if we go back to right here, right? So let's take a look. So another thing, I think, James, I mentioned you here, right? So again, these were my levels, so you can't see the premium and discount, but what I'm saying is we're at the weekly opening price, meaning we went long from here, didn't we? Yeah. So what I'm trying to say is that you don't want to be buying or selling at the weekly opening price. Think of the weekly opening price as like the week's, in quotes, in inverted commas, equilibrium. What that means is you don't necessarily want to be buying or selling at the weekly opening price. So if you just take a look at, let's take a look at where the weekly opening price was. So it was like here. Let's go back to New York session. So it looked something like this. This was the weekly opening price here, right? This is the PO3 for the weekly opening price. Now, if this is key level, let's call it 1, 2, 3, and 4. We're basically looking for a bolt off one of these. So, in other words, you want to be buying below the weekly opening price. This is one of the major topics which I don't speak enough about, but I want to start making more videos. The best buys will come below the weekly opening price, right? The best buys will come below the weekly opening price. I want you to think about it this way, right? If you can understand where the highs and lows of the week are, your job is going to become way easier. Because essentially what you want to do is you want to be trading away from the weekly highs and lows. So what that means is, I mean, we had FOMC today. So I think, James, you made a comment a couple of days ago about how Thursday, I think, correct me if I'm wrong, you said like Thursday and Friday was going to be like the move, or you said something along those lines. Or maybe remind me, what was your point there?
Yeah, so it was just how the market interacts coming into FOMC, and then it repositions. So it's how the auction happens after FOMC.
Yeah.
I don't remember exactly what I wrote, but
it's all right.
That's a couple weeks ago.
It's all right. I'll explain it to you in terms of the weekly candle, right? So, for example, this was Monday, right? So this is where the week opened here. Now, basically, what you want to understand is when we have FOMC, which was this week here. So this area here was FOMC. When we have FOMC typically creates the highs and lows of the week. Now, because we're at all-time highs, I don't really like to fight the trend. I don't like using that word, the trend, because people try and follow the trend and they always take buys, or they'll try and like catch the top. They'll do all this crazy stuff. But when you look at FOMC and you look at the FOMC weeks, right, what you want to just as basic knowledge, you want to understand this, right? You want to understand that if this is FOMC, right, FOMC creates the high or low of the week. Just remember that. FOMC creates the high or low of the week. So in other words, you want to be trading away from FOMC, right? Even if FOMC was like up here or something, if it was above the weekly opening price, you want to be shorting. Just remember that, just as basic knowledge. Trade away from FOMC, right? Here's the weekly opening price. You want to take longs below the weekly opening price. Just as a side note, which is another reason I took longs actually. So okay, here's another reason I took longs, right? So notice what we're doing is we're stacking confluences, right? I looked for a long at key level 2. Key level 2 was below the daily opening price. It was below the weekly opening price. Therefore, we are below the opening prices, right? Just remember how a candle actually works, right? If you take a look at a weekly candle, for example, right? If you just take a look at a weekly candle, our job is to understand that in order for the markets to go, so just remember this, right? Markets go down before they go up, right? And you can understand this from a weekly candle perspective. Now, obviously, you don't do this blindly. You need to know which levels to trade from. But once you understand how a candle forms, right? We don't really want to be buying with so much enthusiasm when we're above the weekly opening price. We literally have to wait for price to come below for us to take advantage. And that works on the daily candle as well as the weekly candle. I use the weekly candle. I don't really use the daily candle. This is just a confluence. So another confluence was this, right? So remember, this is something which I've kind of been doing it, but the days I break this, the market gives me a little slap on the wrist. Try and remember this. You see, this here is the volume profile. Now, you don't want to get too bogged down on what this actually means, right? All this means is where the previous day's volume was situated. So in other words, as long as you're trading where this blue region is or not too far outside where the blue region is, you'll be okay. If you're trying to trade below or above, you're trading in low areas of volume, which typically doesn't end well. So if you just take a look at where the trades happened today, here, key level 2, it was inside of the value area. It was inside of the volume, basically. So the reason I'm going through all this is because hopefully you can start to see I'm stacking confidences, right? That's all I'm doing. This is a game of following systems. Positioning, and this is all still positioning, by the way, right? This is all positioning. So this is the 4-step process. So I've been through my structure. I've understood the targeted liquidity. I understand that we're in discount. I've got my price in bands, and then I've hit my key level. There's even more confidences you can use, such as volume, weekly opening price, etc., etc. Now let's do it. So first of all, James, I think you caught this short or something. Aman, did you catch this short? I know there was a short here.
Yes.
Did any of you catch that one?
Yes.
2 to 3.
No, from 1 to 2, this short here.
No, I think the one I got was from 2 to 3 yesterday.
That's fine. James, did you catch a short from 1 to 2?
I did.
I actually didn't because my laptop froze during that time, so I actually couldn't catch it. But that was a good trade.
Yeah.
However, let's see. So this was probably halfway through session. So from here, I was looking at it very carefully. So I didn't have a clear bias at this point, right? The reason I didn't have a clear bias was because what did I even say? So we're in premium, so I was kind of looking for shorts, but we may have seen the low of the week and we had already seen a discount, so I was kind of looking for longs. The lesson here is that if you don't have a clear bias or the market isn't giving you a clear bias, it is okay to walk away. You don't have to trade. That's an important point as well. You don't actually have to trade. And then my favorite topic is understanding levels. So if you look here, this is my favorite topic, and I teach this with a lot of heart, a lot of passion, because I think it means a lot, man. I think if you can just crack levels and get confident with, first of all, understanding where your levels are, but how you find them. If you can truly trust your levels, order flow becomes way easier. And I made a document which I'll send both of you afterwards that you can kind of dig into, right? One thing that you want to know, this is what's super interesting. Now, if you remember last week on Friday, I took a long on Friday. Was it Friday last week? Friday the 24th of April, yeah. So it was this one. It was a fantastic trade. When I say it's a fantastic trade, I don't know if you guys remember on Friday, this was like $1,000, this one here.
Oh, yeah.
This one here. Now, the reason I'm bringing up this trade wasn't because it was a winner or a loser or anything, but what you want to try and understand is that level from Friday. Like, I want you to buy into this, because so many people ask me, how do you find your levels? The short answer is that you're looking for a price imbalance and you're looking for order flow to confirm it. The long answer and the unpopular answer is it does take practice. It's something you need to train your brain to see. The reason I have frameworks, so the reason I follow this framework, for example, this main framework here, the reason I follow this framework is because you want to position yourself, you want to understand price, you want to understand proof, and then you want to execute with precision. Now, this is the trick, right? On Friday, I took a trade here. So I used the precision entry or the bolt breakout blueprint to find an execution here. Now, what you want to understand is, hopefully you can all see that each piece is connected. I've designed it on purpose like this. Each piece is connected, because once you've taken a precise entry, you don't want to forget that level, right? You don't want to be like, oh, I took a good trade on there, I forgot that. No, you want to understand that precision entry is still a key level for the future. And this is a very classic example. This was the 24th of April. Okay, this was the 24th of April, and this was today. This was the 30th of April. This is not a coincidence, right? This is not a coincidence. I hope you all can see that. I need to hear a yes, because this is super important. This is super important. This is like right. This is the gold dust, right? But this is kind of, if you can understand where limit orders are resting, that is 80. I used to say it's 50% of the battle. No, I've upped that to 80%. That is 80% of the battle, knowing where the limit orders are resting. Okay, so that is why precision leads back to positioning. And then we go price, then we go proof, then we go precision, and around we go. It is a process that is never ending. It's a circular process. So I hope that makes sense. I hope, because I get a lot of questions about this, so I try to make it as clear as possible. This was the 24th of April. There were limit orders resting here. It's not a coincidence. That is not a coincidence. So now let's move on to hopefully that made sense, and that's something I'll go through every single day. So had some questions.
Yes,
there.
it
So,
does.
yeah. Now from here, hopefully again you can see the power of levels 1, 2, 3. So it's about being patient to wait for the bolt, right? And also trusting the bolt after a loss. That takes a huge amount of, I guess confidence, right? I'll try and break it down. So here's what I'm going through. So the first trade, I got crushed. Let me just break it down. So let me break it down. There was definitely one. Okay, it wasn't even this one. Patience pays. Okay. So here we are. First trade. I think I was at minus 900 or something, or minus 800. I got crushed. Now, the truth is, right, if you just take a look at these two trades, the win and the loss and the win, there was actually no difference between them. Like, fundamentally, there was no actual difference between them. Like, if you look at it from a pure technical perspective, the level was hit, right? We were in discount. We were below the daily and the weekly opening price. We were in a high volume area, and there was absorption, right? That was, I shouldn't have even written the word dumb there, because truthfully, this trade and this trade were very similar in nature. In fact, they were the same thing. So now from here, the win was, it was a fantastic trade in the end. In the end, let's break this down. And this is what today's session is about. Now that we've got here, right? We're looking at the bolt. In fact, I made a separate video. We're looking at the bolt breakout blueprint. So again, hopefully you're using this scorecard. Hopefully all of you are using this scorecard. Let's quickly run through this, because this scorecard here is basically how I like use it basically. So let's break this down. Do you see a body break above or below the zone? Okay, that's the first thing. So yes, there you go. So let's go to this live in action. So, does someone have a question?
No. Somebody called.
That's all right. It's all right. It's all right. That's no worries. No worries at all. So now from here, what we're doing is we can hopefully see this. So there you go. So what we're looking for is, can you see a break outside of the zone with a body? I like to see a body break. So that was going to be here. Now, this is the body break. However, for me, because we were choppy, James, we spoke about it yesterday. I wanted to see price get above this line here. You could have used this one, but I prefer to see this one because of the chop we were in, right? Because of this, basically. Like, it wasn't, this here was not good. This here was not good, but this was the break line, because I get a lot of questions. So the bolt breakout blueprint, right? This is how it works. You first want to see price breaking outside with a body. Does volume support the breakout side? So what I mean by volume is, are you inside of the previous day's market profile? Are you inside the previous day's volume? If you are, good. Tick. Now, have you marked out the top/bottom of the candle that broke outside the zone? Those are the 3 questions you need ticked, right? So from here, let's go through this exercise together.
Hey, and I have a question for that, because I now hear you doing something different. Based on volume, what you're saying is that other MP, TDO, or indicator that shows previous days volume, is that what you're talking about?
Yes.
Okay, because I interpreted what you wrote here as the breakout candle has to have enough volume in itself to show acceptance.
That's not that's not entirely wrong. However, when you mean by enough volume, what does that mean? Like, your interpretation of enough volume could be different to mine. Whereas if you actually look at the market profile showing you the volume distribution from the previous day, that's a lot less subjective. That's a lot more objective. However, what your approach isn't wrong. It's not entirely wrong to think that.
Well, it shows intent. It's like it shows intent on that candle. There's plenty of people showing up, buyers or sellers. And in the volume delta is like more than 500 or more than 1K.
Yeah.
That candle, there's a lot of people that showed up on that candle. Right.
In fact, let's go through it. Let's actually study it down, even though this is the trigger.
Yeah.
For me, if you look at that, for example, that there would be classed as high volume right there. That one.
Right.
Yep. So let's go. Let's just do it in order. So now that you've done that, right? So what we've done is you have let's tick this. So do you see price breaking outside of the body? Yes. Does volume support the move? To me, yes. Have you marked out the top or bottom of the candle? So these two should be switched around. The third one and the second one, they should be in the opposite order. Yes. So what you want to do is you want to mark out, for me, this line here. Now that is the B. That's the B, right? That's the bolt. That's just the B. So that's like the B. Now we move on to optimal retest. Do you see price coming
Sudeep,
back?
sorry, just a quick question.
Yeah.
Back to the same chart. What about the candle before that? Did that also break outside of the zone?
Yeah. So I'm actually going to answer your question now. I'm going to answer it now. Do you see price coming back into the zone with at least 2 candles? Now, strictly speaking, you can do it off one if you want. With me personally, I like to see 2. It's just a personal conservative approach. However, you can do 1 if you feel good in the moment. To be honest, there's different ways of approaching this. I like to see at least 2 candles coming back into the zone because I want to see at least 2 minutes of absorption. Just from my own personal experience, I'm a little bit more conservative. I don't like to just take I just prefer to see 2 candles. It's just a personal preference of mine. Now, if you look here, there was actually more than 2 candles. There was actually about 3. 1, 2, 3. Hopefully, if you go to the execution, there was this one here. So there was at least 3 candles, at least 2. So 1, 2, right there. Hopefully, you can see. Can you all understand that?
Yeah, and I have a clarifying question though. When you say at least 2 candles retraced back into the zone, you're talking about the zone of the breakout candle, the high and low of the breakout candle, not necessarily going back into retracing back into the key level that it broke from.
Yeah. So if I understood your question correctly, I'm interested in price breaking above this high.
Yeah, but then the optimal retest that we're talking about now, you want 2 candles to go back into that zone of the breakout candle, not necessarily go back into the key level that it broke from.
I want to see it going into the key level. I want to see at least 2 candles inside of the key level. So for me personally, I want to see at least 2 candles inside of the key level. So for me, I saw these 2 here. And even this one as well, because it was technically inside these 3. I want to see at least 2. So if I break this down one more time, right? One more time, what's going on? So we've tapped into the key level. I want to see, 1, 2, 3, and then 4. So this is when I pull the trigger. So for the optimal retest, and what's important to understand is optimal retest and liquidity absorption, those two come hand in hand. So typically the optimal retest and the liquidity absorption, they will happen at the same time. The reason I put an optimal retest first is that obviously there's no point looking for an absorption unless you're inside your key level. So when you see price coming back into the zone after showing signs of breaking above, step 3 is the most important. The L is the most important. Right? I often say this is the only L you want in trading is liquidity absorption. So in order to buy, do you see lots of red delta or aggressive sellers inside the zone? So let's go inside the zone and let's see what was going on here. Hopefully you all can see how obvious that is. Now, the candle I want to draw your attention to is this one. Why is this candle interesting? And I want both of you to answer. Aman, I'm going to start with you. Why is this candle interesting, this one here?
First, it's an optimal retest. Sellers trying to push the price down, and I can see the blue delta, the aggressive buyer, also pushing the price up outside of the zone.
Yeah. James, your turn.
Yeah, so this is the breakout candle, and we see absorption before that candle.
Yep, that's one thing. What I was pointing at, and the reason why I'm bringing this to your attention is because I want to train your brain to spot this, right? Do you see how this is a green candle? What I want you to understand is that you can have a green candle, but if you look at the bottom of this green candle, the numbers are fuzzy, but it says 200. Let's just say 232 for 29, I think that is 232 for 29. Can you see how we had a green candle, which means by definition the candle is bullish? But can you see how there's a massive seller sitting over here, massive aggressive seller sitting over here? Can you all see that?
Yes.
This is classic absorption. This candle here, typically in a trade, you're only going to see one or two candles that like, okay, I like the look of that. When you see a green candle with a ton of selling and we cannot break below the zone, this is what liquidity absorption means. This is what separates. This here will separate a good setup from a great setup. Being able to see the liquidity absorption in real time is king, right? That's going to separate you apart, providing you got the right level. And the way to do that is to almost train your brain to look for the opposites. Green candle with lots of selling. Think about what that means from a very sort of basic third grade thinking perspective, right? A green candle means higher prices. Red delta means selling. So I'm seeing higher prices with lots of selling. So if price wants to move up and I see lots of selling, are those sellers actually rewarded? No. Right? So that's what the L really stands for. What we mean by liquidity absorption is you want to look at buy side liquidity and sell side liquidity. And inside that level, your job is to see who was absorbed. In order to buy, you need to see sellers inside the zone being absorbed, right? In order to buy. So if we're looking for buy trades, you need to see red delta. So you need to almost flip your brain to look for the opposite. All right. Now that we're at number 3, I'm just going to quickly take you back to 1. So on a scale of 1 to 5, James, how would you rate the break? How would you rate this break here? This one. Let me see. How would you rate this break here on a scale of 1 to 5?
On a scale of 1 to 5, that is probably a 3.
Why'd you say 3?
Well, because it's a hesitation candle. So there's not a lot. There's not a lot of aggression in that candle. It broke above, but there wasn't a lot of if I look at the footprint chart, I see the red sellers being absorbed. I see the green candle, but it's not real long, and I see wicks on both sides. So I would give it kind of a 3 out of 5.
Yeah, it's not bad at all. What do you think?
Yeah, same 2 or 3, because based on the previous 10-15 candles, same thing, sellers are pushing the price down and the buyers were pushing the price up on that particular candle.
Yeah.
Seems like both sides are fighting outside of the zone.
Yeah. Yep. So do you see price breaking without a body yet? Tick. Yeah, so that's definitely a tick. Do you see volume supporting? So we're inside the volume profile. Yep. And we also did see some buying creeping in here, so I've just about ticked this one as well. Have you marked out the top or bottom of the candle? Yes. So believe it or not, I'd give this a 4 or maybe even 5. The only reason I wouldn't give it a 5 is because of the range before that. That's the only reason I wouldn't give it a 5. I would give that a 4 because at the end of the day, it ticks all the boxes. Volume supporting, yep. You see a body break, yep. Have you marked at the top or bottom of the candle? Yep. So I'll give that a 4 myself. 3 is okay. I can kind of understand. I'll give that 4 myself. This is where it starts to get interesting. And I'll show you why I'm scoring these at the end. You can see here why I'm scoring them. Do you see price coming back into the zone with at least 2 candles? So 1, and then would you count this? Probably not, right? Because this constituted to the break candle. This is the trigger candle, which we're going to get onto. I personally would count this as 1, 2. I would personally count this as just about 2 candles, right? Just this one here. So these 2 or 3 here. So with this one, do you see price coming back? I would rate this a 3 myself, 2 or maybe 3 max. I wouldn't go more than 3 for this one. Does that make sense? Do you agree, or do you have different opinions on that one?
I do agree. Yeah.
Now, liquidity absorption. For me, this is a 5. In order to buy, do you see red delta or aggressive sellers inside the zone? To me, that's a straight 5 because I'm looking inside the zone. I'm not looking at individual candles. I'm looking inside the zone. So this zone here, 67 to 60, let's say 63. This here, hopefully both of you should see it's a 5. This candle here pushes me to think it's a 5. This is a 5 right here. Do all of you see that? This is definitely a 5. And 3 is the most important one. Now we pull the trigger. Has price moved past the break line you drew? So the break line I drew was at here. So this is this candle here at 38 past 10. liquidity absorption, and then we pull the trigger. Bang. So that's when I pulled the trigger right there. Stops below the level. And then I actually had I targeted 2.5 R. So it was around here I closed, somewhere around here. No, because I had my stop here. So 2.5 R would be like here. So do you see, this is the bolt breakout blueprint. Do you see how we've gone through? So let's quickly rate that. So the B, what did we agree B was? B was 3, right?
Yep.
The optimal retest was 3. The liquidity absorption was definitely a 5. And also, what would you rate number 4 as? Has price passed the break line you drew?
I saw that as a 5 because it was a strong candle.
5, yep. And also, if you look very carefully at the candle, if you want to talk about volume, to me, if that isn't volume, I don't know what is, right?
That is leading the way for sure.
So what did we rate this as? So I personally had this at a 4, but let's go for the worst case scenario. So 3 plus 3, 9. No, sorry, 6. And then 5 plus 6, 11. And then 11 plus 5, 16. So if we go back to our friend over here, it was an emerging sniper, which I think is about right, considering we had a horrible range before.
Yeah.
So I would say, if your trades are not above 14 or 15, you shouldn't be taking them. And what's an important thing to do is you should actually go back and grade the trades after you've taken them.
Yeah.
And honestly fill out this form and say, was it at least, I mean, you may not get a 20 every single time, especially in these market conditions, but if you can get anything more than like 17, I think today we had 3, 6 plus 5, 11. We had 16. 16 out 60, that's like 80%. 16 out of 20 is not bad. Anything more than 15 is good. So by definition, it was an emerging sniper, which I think is very accurate. It was definitely emerging. It wasn't like, it didn't want to be it was definitely a patient sniper, but a very patient one. Hopefully you all can see that. The reason I say it's an emerging sniper is because, it really took its time.
Yeah, a lot of opportunity to enter early.
No, it's not even entering. It's not even entering early. You could have entered here. Right. I actually stayed out here. I didn't feel confident, and you could have entered here and here. You could have. It's not even about entering early. Depending on what the order flow tells you, you could have entered here at any point. It's just one of those things.
But with the chop, there to enter early, there's a whole lot more chop to enter early before that main move that you caught.
Yeah.
Oh, yeah. No, I get it. There was like 3 or 4 entries that you could have made. And several would have stopped out, but then you grabbed that one that just took off, which, well done.
Yeah. Again, what sold me on it was the fact that we were, to me, I had this for me personally, this was a 4. This was a 4 as well, because I saw more than 2 candles. So 4, 4, 8, then these two were 5. So it was actually, for me, it was actually 18. I would maybe grade it to 17 because of the range, but this was like an 18 out of 20, right? And this image explains why. I think I got rid of it now, but this image explains why. This here is classic. Look at that. Yeah. Look at that. The trigger after the break line gets passed, right? There's your image again. Look at that. Sellers got trapped. And I think the most important thing to understand is that number one is the level. So 24th of April, it just, because this trade here was really good. This trade here was even better. Now, let's finish on this. This will be the last thing we finish on. Luca found a level which I totally forgot about, right? This here was such a valid level. He found it. Well done to him. What happened here was there was a supply area, and then there was a demand area here. So basically, if you wanted to take this trade at, I didn't take this, but if you wanted to take this trade at, this was maybe 6:30 my time, so 6 hours behind, 12:30 p.m. Eastern, right? 12 Eastern or 10 a.m. your time, James. I can't believe this is still the morning for you.
I know,
crazy. I can't believe that. So how would we do this? Now, what I'm going to assume is we have the footprint charts here. How would we do this? Because let's grade our trades together. So for me, this would be the break. This would be the break line here. For me, it would be this one. That would be my break line. Yep.
So why? So question for that. is that is a downward candle.
It doesn't matter. It doesn't matter.
Okay.
Because I saw price breaking up here. This was the break, right?
Yeah.
Now for me, I wouldn't. This is too close to the zone.
Right.
I would just use this one here.
But what I just heard you say though is it does not matter the polarity of that next candle. Okay.
No.
See,
it doesn't matter that this. It doesn't matter. This is a red candle. That does not matter. That doesn't matter.
Okay. Good
So
to know. Thanks.
what we're looking here is: do you see price break above break above or below the zone with the body? So do we see price break above the body? Yes,
Yeah.
we do. We see that here and here. Right.
Okay.
That's the first thing. Does volume support the move? Let me quickly just confirm that. Give me a second to do that. Was price even inside the volume? I don't think it was. Oh damn! Was it? No, it wasn't. Wow. Okay. So from a footprint chart perspective, you'd have to look at that. I mean, I haven't got the footprint charts for this right now, but
Yeah.
you'd have to look at that. And see, you would want to see something like this. You'd want to see that. Let's assume we have that. Let's just assume we have that. So if we have decent volume and we've marked at the top or the bottom of the candle like this, which we have, this line here is very important, then this would be a 5. This would be a 5.
Sure.
Now, do you see price coming back to the zone with at least 2 candles? Yes,
Sure did.
definitely. Here we see 1, 2, and then more than 2. So 3. So depending on how you trade, I would not be in the trade at that point. Do you see price coming in with 2 candles? Yes. In order to buy, do you see lots of red delta or aggressive sellers? Now, in this region, there were huge amounts of aggressive selling, right? That's the reason why we had such a move to the upside. So basically, let me just open this again. So if we saw this, right? If we saw this and this, then I would give that a 5. And then has price passed the break line you drew? So far we're 5, 5, 5. Has price gone above the break line? I would be looking to enter there. So as soon as I see price passing this line, I would look to enter. I'd have my stop below the zone. And because we're at all-time high, I would just be happy to take a 1 to 2. So nothing crazy. I'll just be happy to take a 1 to 2. And what's crazy about that is that there was actually another entry here. Now that I see, look, there was one here. So if I break it down, there was an entry here. There was one. And what you would have seen, as an interesting activity, you can go and study what was going on inside of this wick.
Yeah.
Probably just getting trapped.
Yeah. And then what you want to do is, where would be your second break line here? Probably here. So probably around here. I would say somewhere around here. And again, you would have your stop below the zone. And once you do that, you would just go and target a 1 to 2. That's all you do. Done.
Yeah.
That's a good exercise for both of you. Go back to the footprint charts and try and explain to me what was going on here.
Yeah.
And
if you ever need any help, just use this friend here. This will help you.
Got it.
Okay.
I have
That
a
was a
question.
good- Yeah. Go on.
So I've got a question for you. I saw. Do you mind if you don't need to record this. This is mainly some price action and order flow that I saw today. And it made me ask if you see price break above a key level and then it retraces down and then it breaks below the key level and then it goes right back into the key level. Do you mind if I share my screen?
No, so I'm just trying to. So basically, is it like this?
Yeah, let me share.
Like this? Yeah. Then it'll be a flip zone. Then it'll be classed as a flip zone. So we would see passive buyers here, and then when they fail, we then look for passive sellers. So
but it didn't actually go out as much. It was more wicking up, like a long wick up, and then a long wick down. How do I share my screen here?
Yeah, let's definitely have a look. Yeah, because by the look of it, you want to start grading your setups, right? Let me stop sharing my screen. actually not right. Let's actually grade this. So, for example, B. So basically, assuming this is the right key level, when I see that, this gives me anxiety because I'm like, I.
Well, and it stayed within the key level for a good probably 15 candles.
15 minutes then, right? So so B break. So do you see
Body is inside the zone, so the break line, the body has to close outside of the zone, right? In order to put the break
I want to
line?
see I typically so basically I'm going to answer your question, James. If I see 2 wicks above or below the zone and there's no break outside with the body either way and price is going to range, then I would not be looking to trade. Like I wouldn't take that. I would not, because remember you have to go BOLT. So you have to go through BOL to actually pull that trigger. If you're not convinced with B, O, and L, then there's no point pulling the trigger, because then your score out of 20 is going to be less than 10, which is not an acceptable trade to actually pull the trigger on.
Okay, so that's fair. And again, this is I just now pulled this right from the market that we see right now. What I saw earlier, it was kind of a break above, but the body of the candle broke above, and then it retraced down, and then it broke below in the body. And at that point, I'm like, does the second break below cancel out or invalidate the first breakout? Or because it's ranging, are both of those valid? And I'm just waiting for, in real time, the market to commit. Is it going to go up or down? And so in this scenario, if both of those candles have broken out and then retraced back in, are both of those valid as break lines?
For me, no, I wouldn't. I wouldn't try and force it or push it. To me, this looks like wick above, wick below.
Yeah.
And also, I would need more context. I mean, are you talking only about the B? Because obviously, I don't know if this is going to be a valid trade or not just by looking at this. But
well, so
no, I wouldn't consider that a valid break line. No, I wouldn't. No.
Okay. All right. Okay. Hopefully, I won't see it play out that much. But I know that I will.
Then you yeah.
The next time I see it play out, I'll capture a screenshot then so that we can reassess. Yeah. Okay. I just hadn't seen that, and at that point, I'm just putting boundaries on the high and low based on price action. Anyway, I just didn't know if it invalidated the other one. I actually kept both. I actually kept both and waited for the order flow, and the sellers showed up strong and broke below that break line below, and we were off to the races at that point.
Yeah.
Okay.
Good stuff. Now, what I like to finish the calls on is basically this. So actually, I haven't even got anything to say, because if you go to a 4 hour, we're just ripping all time highs. Like, technically, there's no levels to the left. Like, it's not like these levels are invalid. They are still very valid. We still need them. But the problem is, let me just get rid of that. Sorry, one sec. The problem is, right? The problem is when we don't have. Let me just do that. When we don't have any data to the left, it means basically my trick for this is to basically use fair value gaps tomorrow from the London session. So I'm going to look. So I basically cannot give you a pre-market plan for tomorrow. Often I like doing it. Like if you asked me yesterday, I would have had to keep an eye on these levels, but we've blasted through all of them. So yeah. So there is no clear plan at the moment. At 9 a.m. tomorrow Eastern, that will change, hopefully.